This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, while I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is how to set up your real estate business for success. Now, if you think about it, as a real estate investor, what is a real estate investor? Notice by this definition, an investor only commits money. Ask yourself, are you really just a real estate investor? Are you only investing your money in real estate, or are you planning on investing much more time, energy, efforts, and relationship resources? If you just want to invest money, that's cool, because that's understandable. With yields from 6% to sometimes 150%, real estate is a totally great passive investment. If you are only planning maybe on buying a few rental properties for maybe an extra $500 in cash flow, or maybe $1,000 extra income, or maybe flipping a house once a year, maybe it's not necessary to set up the business entity, although some may debate that. If you're really looking at buying larger multifamily apartments or commercial property, you'll need to build the right business foundation. If it is a business, you need to look at it differently. So in this week's podcast, I'm going to talk about setting up a real estate investing business entity for maximum benefit, safety, and leverage for the long term. Take a moment into what's behind the curtain of your real estate enterprise. Even with a single buy and hold investment property, you can clearly see it is a small business revenue. You have a client or clients who are your tenants. You have necessary expenses for the property, including such things as maintenance, advertising, renovations, appliance repairs, property management, etc. You have very real and necessary business operating expenses, as your phones, vehicle, office supplies, bookkeeper, etc. The IRS wants to know the details of this asset and business. You are required to submit annual year-end information for tax purposes. Your intention of investing in the property is to create financial gain through positive cash flow and equity property, or even other real estate investment strategies. It quickly becomes apparent this is definitely a business. So let's look at the basics of setting up a business entity and what is required there. While it may be tempting to just give it a whirl as a sole proprietor, you may be taking an unnecessary risk. If your business gets into any kind of legal hot water, and in places like California where I live, that is almost a given, your personal assets could be at risk. And in addition to that, the right entity, an LLC or an S or C Corp, for example, may offer key tax advantages you want to take advantage of. It's also easier to create a business credit profile and eventually get business financing if you have a separate legal entity. So let's talk about the nuts and bolts here. You want to set up an entity with a separate tax ID from your personal Social Security number. This will ultimately benefit you in helping you protecting your personal credit score and rating, and also you get actually more funding available to you as a business as opposed to a consumer. There are also tax benefits, as your business expenses can be applied against your personal income on the business tax ID. As far as what type of entity you'd set up, I personally recommend an LLC. That's relatively easy. You can set up an LLC through, for example, LegalZoom.com for as little as $149. You can even do it for less in other places. You can also set up an S Corp, but again, I would advise not setting up something like Irishship. I would also recommend in your entity name that it does not have your name in it. Something like C4 Properties as opposed to Harold Jones Properties, unless, of course, your name isn't Harold Jones, and then that might make sense. No, just kidding. But I personally already blew this because I have an entity called Manacero Properties, LLC. But really, that's more of a marketing arm, and I don't have a lot of the business expenses go through that. I have separate LLCs in each state where I have the properties, and then all of those flow through a Wyoming LLC. It is a pretty good asset protection strategy there. Setting up a location. We recently had Ty Crandell on, who is a business credit expert. And in episode 099, Funding Your Real Estate Investment with Business Credit, he recommends getting a separate virtual address, not a UPS center or a mailbox center, that kind of thing. And the reason for this is that banks now, when they do credit for businesses, they'll oftentimes go on to Google, look at a Google Street View of your address and see, is this your residence? Is this a mailbox center, or is it a regular office building? And you can get these virtual addresses in real office buildings, which is really nice. And you can have your mail go there as well. Some of the places also have rooms available. If you want to have a business meeting with somebody, you can rent a room for an hour. If you want to have a presentation, they have nice board meetings facilities with large screen televisions and so forth that you can do a real nice presentation in. So that's something you might want to look at. And they're not that expensive. They're like $25 a month, which isn't that different from a UPS center. You want to get a separate business phone number. These can be virtually free or just very low cost. Some of them at a place gotofone.com. You can get them with multiple extensions on them. They seem very professional. You can leave messages and so forth. Sometimes they'll even include an 800 number or a fax number. And they're working things that the faxes, for example, would send to your email. So that's a real good benefit. And also get your company listed in the online yellow pages. Again, one of the tactics of the loan underwriters is looking your business up in these entities to see if you're a credible business, that you're really listed there. Building your team it's very critical. You do have to put together a team of professionals. Granted, they're not working out of your facility or your home, but they are people that you're going to tap into, because the success of your business greatly depends on the quality of the team that you have that supports you. People such as your mortgage broker or banker. This is the person where you're going to have your local banker where you have your separate bank account under the separate business name. But the mortgage broker is the person that's looking for loans that you can get for your properties. These are key players for you. Of course, an attorney, an experienced real estate attorney, one preferably that's also an investor that can relate to exactly the day-to-day challenges that you're doing in your business. Same with an accountant, a CPA with a number of real estate investing clients, hopefully somebody who's a real estate investor as well. And then I would have a bookkeeper separate from your CPA. It's a lot more cost-effective, and they can take care of the day-to-day stuff. You can get your entire business set up on QuickBooks Online, and you can access it directly with your accountant doing all the inputting. Then there's a whole lot of other folks that you do want to have on your team. Because I invest out of state, I have teams in each state. So I have an attorney, a real estate attorney that knows the laws of that particular state. Of course, I have a property manager there. Then there are local on the ground people, everything from handymans to contractors and appraisers and inspectors and so forth on the regional or local level. I also want to add the mentors. Having your mentor is considered a very important part of your team as well. There's also insurance agents, title companies, wholesalers. If you deal with wholesalers, those are people that will build out and fill out your team. Key point here is, and I kind of talked about it already, but really important, you separate your business credit from your consumer credit. In other words, set up a separate business account in the name of this entity that you've established. Keep everything separate there. It will help you in the long run, especially as you're going to look for lines of credit. To be able to establish a line of credit of a couple $100,000 and be able to buy that property that you need to buy or get that earnest money down is really critical, especially when things start moving faster in your business there. I think those are some of the key things that I wanted to touch upon. Again, this is an overview. Our Fun Fact Fridays are usually pretty short, so I don't want to go into a lot of other details. I think it's important to really set that key foundation, though, early on. The best way, Stephen Covey says, the best way you can predict your future is to create it. And, this is really important to create the future of investing in real estate. You need to have an idea of where you're going and at least a basic outline for a plan as to how you will get there. The preceding tips that I talked about, or all the tips that I presented, the insights are just a start. Building that foundation is really key. Just a few quick overview of things that you need to do. Keep it simple. Don't make it real complicated. Keep it simple that you can manage, but get the foundation in place. Have a plan and move forward through times, even of times of uncertainty and fear. Partner with people with complementary strengths. Look for people that can fill in the gaps of the areas that may not be your strength. Know that it gets crazy out there, and that happens in business, and you just flow through those and you work through those and using your team to get through them as best you can. Work your plan and don't compare yourself to others, and the plan is really important in establishing that early on. Grow slow, steady. Where your money is where your money is going. So also, manage your money carefully and effectively. I think if you do these basic things here, you can elaborate and you can expand on those things, but I think you're going to be in good shape. And as that entity, you'll have tax advantages here. You'll have asset protection to protect you and your family's assets from your business assets. And there's all kinds of advantages. So that's it for today, guys. Please note everything here will be in my show notes section at olddogsreinetwork.com/blog. And you can look at some of the links that I've mentioned to some of these companies that you can also access for additional information. So until next time, remember, cash flow is king and real estate investing the means. Thanks again for listening, and God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.